stuff doing the rounds the other day, so that's good news.
Yeah. So here we are. We're live with Adam Button of ForexLive, everyone. Welcome to TradeGate Hub. Adam, welcome back. You made a great call last month in your look ahead. You said the month of January was good for gold, and it was until it was though. I mean,
yesterday.
This was a great move. Yeah, till yesterday, and now things are shifting. Actually, I thought I may have missed the long side of gold, but I thought that there was still going to be one more washout, and my whole rationale was new highs in Dixie. So that's where I want to start. I want to start with Euro, and then I want to know what you're thinking going into February, because so much has happened. Where do you want to start? Can we just start here with dollar strength, and will it abate? Is this the last hurrah in the dollar for a while, even though it might have some more upside?
I think that's the question, right? You can't, it goes back to the Fed yesterday, but you can't really have dollar strength, rates rising, and stocks rising. I mean, I think in the longer term you have, but this dynamic that's unfolding today, it's very precarious. Powell comes out yesterday, and he's so hawkish, right? He said, well, could you hike it? Yeah, every meeting's open. I'm not, all inflation. He was even asked about a 50 basis point hike in March, and he wouldn't rule that out. Like that would have been just the smallest bone to throw to the doves.
You know what we need, and I wore this for this occasion, Adam. Remember this guy? Huh? Who's playing? Nice. Who's playing that electric guitar right now? Who is that?
Yeah, I mean, that's great.
We could use Mario Draghi.
He's fighting his own battle there in Italy. There, I think they're the fourth or fifth round of voting on presidential politics over there, and that mess. But I mean, that never ends there. But it was an odd one. And I think the takeaway, everybody talks about the next meeting or where will rates be at the end of the year. I don't think it really matters if rates are at 1% or 1.25% at the end of the year. What really matters is where they're headed. And I think before today, I felt, probably 2% is the top. I'm not sure when we're going to get there, but 2% Fed funds. And now you got to be thinking about 3% Fed funds. And I think that's a pretty big difference, or even higher than that, right? In terms, especially you got a 10-year right now at 182, so you're going to have to go a lot higher than that. Borrowing costs are going to have to go up, mortgage costs, the whole works. Now, nobody thought that a year ago, and so a year from now, that could all change. But Powell, and then GDP comes out today. Nominal GDP last year was 10%. The U.S. economy grew 10% in constant dollars. Now, you knock that down a fair bit because of inflation. But, so real GDP ends up, it's still the best year since 1984. And, they're fighting inflation. And I don't think they're too worried about growth. Powell comes out and says jobs growth has been remarkable, which it hasn't been. But, okay. That just goes to speak to his mindset and the mindset of the FOMC. Now, again, if prices start to reverse in H2, but it almost seems to me like they saw something that freaked them out a little bit.
How about that? I know if I was Fed chairman and that was my new mandate, what would scare the hell out of me would be this chart. Soybeans. Because I don't care how much I tighten. It's not about rates. It may affect farming, but it's all about weather with agricultural commodities. So how can a monetary policy contain shortages that are weather related?
Yeah. And wheat as well. Wheat is Ukraine's number one export. Yeah. Two down the list there. Yeah. Was going up every day. And then oil's at a 7-year high right now. I think
cotton. That was another great call you made last month. I said it. I was hearing a lot of oil bulls. I didn't think we'd make new highs. It was really nice call you made.
Well, let's get to that in a second. But just on your bigger point, and natural gas and power. Yeah. And it was interesting. I think it might have been the Bank of Canada, might have been someone else, maybe the Bank of England, talking about the green transition, or BlackRock actually it was. So it was old Bank of Canada guy, Jean Beauvais. talking about the green transition, right? And they're going to have to build out all this infrastructure for it. And they're going to be cutting off oil and gas supplies, which are pushing price up. So you get price inflation right now, and then you get demand inflation on new builds. And so the whole thing becomes inflationary, and that's like a 10-year tailwind, at least, right? So, this inflation, I think it's they're starting to get the idea, all right, maybe the old normal of we can't seem to get inflation up really is over. Now, I don't think anyone knows, but the dollar's acting right now like, wow, they're going to tighten a lot, or they might tighten a lot at least. And rates, I mean, like I come on here every time and say the biggest bubble in history is the bond bubble.
I know.
And they're not going to be buying any more bonds. So, it was
I heard this tightening also is going to bring on people that are on the edge, that with even liquidity cannot change solvency issues. And that there's going to be a lot of defaults during this Fed hiking cycle if it goes on for a while.
And you just never know how levered people are, right? And I think that was a lot of traders. I mean, I'm out there borrowing at 1%, levering up. I mean, because you can, and you just need to find something that yields more than 1%. And a lot of people are borrowing, real money is borrowing at much less than 1%. So, when they have to pay to borrow, suddenly these NASDAQ trades don't make sense anymore. Now, it still makes a lot of sense if you're getting growing dividends and whatnot, and you still can't buy bonds, so there's no alternative. But, you do want to be in any kind of carry, and maybe you can just do it at the front end. I don't know, but the Fed hiking, I think the Bank of Canada was a real head fake yesterday, because they're going to start hiking every meeting, and I think they were pretty clear about that. They just wanted to tee it up. So, we're worried about inflation. And I saw an article today, rental inflation was up 12% year over year in the US. That's real inflation, gets people real. But what can you do about it? To your point, if Ukraine and Russia breaks out in war, what are you going to do about it? You can't. It's not. You're going to kill the economy to just kill demand so much that you bring down the price of oil. Good luck with that. I mean, that's not a winning formula.
Yeah. Well, it looks like China's going that way. They're easing. Okay, so how do you explain what's going on now? You have to say, wow, there's some real bifurcation here. We're on this tightening binge, and did China already go through it, and that's why they're having the debt problems, and now they're trying to fight that by easing, and they also want to have a nice calm and outstanding, beautiful Winter Olympics.
Yeah, and Omicron, right? I think last time I came on.
Yeah, you said zero tolerance.
Zero, and it's continued. Now, it doesn't seem they're quite as zero anymore. They're allowing, a little bit in Tianjin and near Beijing. But, if those get worse, I mean, there's still several cities locked down right now. So, and all the testing, it's got to have an economic hit, all this. And people are scared.
Could the Fed be tightening into a weakening global economy?
And I think that's the risk. So the Fed looks at China right now and says these lockdowns are going to hurt supply chains. Okay, fair enough. Yeah. That's inflationary. But those lockdowns are also hurting growth. Yeah. And that drop in demand is disinflationary. So, I'm not sure they're coming down on the right side of that. Sure, short term, those bottlenecks and those problems. But how are you solving that with higher rates anyway? Yeah. So, I'm very concerned that they might be using the wrong playbook here again. And I'm very concerned that China will. I still don't know how China is going to get from COVID zero to opening up. And even Hong Kong, who is sort of halfway in between, right? They had done okay on COVID. Now that's out of control there. It's out of control in Hong Kong. And they're saying, listen, we just need to have these pretty strict measures for 2-3 months, then we're going to live with it. Okay, so you're telling me Hong Kong is going to live with it, but mainland China isn't? And Hong Kong's getting killed right now, killed. Businesses are getting killed. And I just don't understand how we get from point A to point B. And I don't understand why the market's not watching. Yeah. But it's like COVID was in the beginning. Nobody cared.
Well, if you're right about this, and at zero tolerance, and it's starting to spread, and it'll spread more during the Olympic timeframe if they're a little looser, then after the Olympics, they're going to have more shutdowns.
They have to. It's inevitable. I mean, Omicron. It's
I wouldn't own oil up here anymore, Adam. Well, Are you booking profits on your
Buddy,
bullish oil position?
and do you know a bigger oil bull than me?
No,
I mean, maybe
no,
you do, but not many.
not
And I've
many.
been bullish for a year and a half,
Yeah.
crazy bullish, and I'm out. I'm
Okay.
not out.
Wow.
I'm not all out, but like this buying is out of control.
Yeah. So, I mean, is really the Russian invasion going to cause a spike in oil?
Well, I think you have to look at oil right now and you say, okay, either the supply demand, this market is super tight on the physical side because it's buying it almost every day. I mean, it was down for one day on like 10% correction in the S&P.
I shorted it today. And you know what? And you gave me more conviction. I mean, I'm already out at a piece today. I think, I did it off a 15-minute chart, but this is the first time I've heard you be out of the oil market.
And I'm like,
this is news. You're making news today.
For the second half of the year, I'm so bullish because I think inventories, OPEC production isn't there. I think Omicron ends. Assuming China gets through it, it's going to run, and I think plus 100 oil's in the bag. But right now, Omicron is hitting air travel. It's hitting driving in a lot of places. It's obviously hitting China, and yet oil's up every day. Now, somebody could be buying now. It could be through the futures market. You'd be stockpiling. There's actually a great article on Andy Hall, who is like the best crude trader of all time, talking about how he was filling tankers before the Iraq war because he thought it was the original Iraq war in 90.
Wow.
Yeah. It's a cool article. And so people could be making that trade on the demand side for later in the year or on Russia, which to me makes a lot more sense. And there were OPEC officials, unnamed, cited by Energy Intel yesterday, which is a pretty good oil analysis firm, saying they think it's geopolitical. So they think, and it makes sense if you're in Europe, you might want, or even Asia, you might want to be stockpiling as much, filling the tanks right now, because you don't know what's going to happen with Russia and Ukraine.
Yeah. Well, how about Russia and the U.S. Cyber? I mean, I'm a little concerned about that would be a huge escalation.
Question for you.
Yeah.
Say Russia head fakes everyone and it attacks Lithuania instead, which is right there, right? And just rolls through, which is a NATO country, or Latvia or Estonia.
Yeah, right.
Are you prepared to go to nuclear war over that?
No, no.
Yeah, I mean, so.
Yeah, so he's going to accomplish his dream of reconstituting the old Soviet Union by taking in the sphere of influence that was lost, and Russia became a smaller country. That was the worst time period in his life, and his whole mission has been to, bring back the glory of the Soviet Union.
And I don't speak, for Russians, but the 90s in Russia, when they abandoned communism, were the worse than the Great Depression. Yeah. They still haven't recovered that level of output.
Yeah. And,
they had some elections that was clearly fraudulent. And so I don't think they believe in democracy. And I think they tried to abandon communism. A lot of people thought America was going to be their friend. And I'm not sure that's ever been the case. The fall, if Cuba ever falls, for instance, there needs to be a more orderly transition, or you end up with another state like Russia, right? There just wasn't enough of an orderly transition from communism to whatever they have now. And I think that just stinks, and it stings Putin, like you said. And if they were to, they do their thing in Ukraine. I don't know how it's going to go, but NATO, the power of NATO is sort of this deterrent, right? But if they were to roll through Lithuania, nobody's going to nuclear war. I don't think anyone wants to go for war for that. And now you have the rest of Eastern Europe saying, wait, we thought NATO was a real thing. Now you're telling me it's not. And then what does NATO even mean in Eastern Europe anymore? And then you got to kowtow to Russia again, which is, that sounds pretty good to Russia. So I don't know.
You think that, they have a lot of gold. Do you think they're selling gold? It's not going to be, we're getting a nice little turn here, but do you think that, that may be part of it to find? It's not cheap to conduct. This is will be the largest land operation since World War II.
Yeah, their gold reserves are enormous.
Yeah.
I don't know how much it costs. The sanctions is the real question, right? So whether they invade Ukraine or not, I think the headline comes out, it's a panic in market for sure. But the next thing to watch is energy right? If they sanction energy. If they don't sanction energy, I don't think it really matters. I mean, there's some steel probably. You want to maybe along some stuff. Find out what Russians selling. Watch out for wheat, because Ukraine, I don't know how they're going to export a lot of that. But, you know, oil is the, you know, Germany, you can see what did they offer? They're getting laughed at today because they offered to send 5,000 helmets to Ukraine.
Yeah.
Like that's all they're offering. And it looks, and UK is talking tough, US is talking tough, but a German general or admiral resigned saying, listen, we got to stay out of this. Let them have Crimea. And then he had to resign. So Germany is saying, we don't really want any part of this.
Well, I mean,
have Ukraine because we need the gas.
That's right.
And
that's right.
And so, you know, and I think they've already made up their mind on that. So I think it happens.
So if you were president of the United States or advising President Biden, you would say, you know what, why don't you give him a deal and say, yeah, we won't ask or ever invite Ukraine to be part of NATO.
I think, well, I think the other question is maybe the US wants this to happen. I mean, what is the US
provoked it even.
Some of the words coming out, they're like, yeah, we're going to send this over later, or we might do this later. So you better invade now, you know, like some of it seemed a little bit on that. And it's, you know, politically, it's not the worst thing, right?
Anyway, so we have a lot of challenges, but with challenges come opportunities. You know, I'd be interested. And remember, we talked about that one of the bearish tenets of a dollar turning negative would be flow of funds out of the FANGs. Remember, I think it was last month you brought up, the guys
sharper memory than me.
Yeah, the guys in crypto, when they get out of crypto, they go to their flight to quality stocks, the FANGs, and they sit there. Well, you know, we know what happened. I said, well, they're going to learn a lesson that, you know, something that has 1,000% increase is not a flight to quality asset.
Yeah.
So could that be it? A continued risk off?
And I think,
you know, maybe the S&Ps end up going to 3,300 after they bounce.
Well, that's a move. I think there is, I mean,
there's
some of that
200 week.
I'm so torn because I look at, you know, these NASDAQ moves and even earnings coming through right now, like, you know, Microsoft, it's okay. You know, you really got to beat now. I think I saw something like 80% over the last 5 years or something, 80% of companies beat on everything. So, you know, obviously the market's not has priced that in. So you got to beat by a lot just to tread water. And you're seeing now in these earnings numbers, like nobody's beaten by a lot. By the same token, and I think a lot's got to come out of, but it has, like Peloton is way down.
Like Apple doesn't look bad. Check this chart out. That doesn't look bad, does it?
Yeah, I mean, they're making real money, right? This isn't even Netflix.
This looks bad.
Down a ton, but you know, I don't know. Bill Ackman was bought it yesterday. You can see the case for it, but smaller cap stuff is getting watched. But I don't know if it matters. I think what matters is the real economy. And I wasn't looking at those stocks. If you look at Nucor came out today, the steel giant, biggest steel company in America.
Yeah.
Said demand strong. They're pretty hyped up about demand. Alcoa, aluminum giant, said they expect demand up. Steel Dynamics, they were a little more granular, said 5-6% sales increase they expect this year.
Is it possible?
And that's on the macro, right?
Is it possible that investors really can't grasp that you could have a sloppy financial asset environment and a strong economy? That having, you know, maybe a 20-30% correction in stocks over into the summer doesn't mean that a recession is brewing.
I think you're onto something there. And I don't know if it has to be that, if it can get that deep, but I mean, it certainly has already in a lot of in smaller cap tech. And I think, yeah, that can go farther. Rates going up has got people jittery. I don't think rates, you know, anything below 2% doesn't really matter. As long as the 10 years below maybe 3%, I don't think it matters, but we're going to get these fits and starts. And I don't believe there's a lot of conviction in the US economy. I have a lot of conviction in it, but I don't think it's out there. So it all leads to this sort of grind that isn't it's not an easy trading environment. And I think we just came out of the easiest environment of all time in 2021. It was up every day, no volatility, no down days.
Don't we have traders, investors, especially since the pandemic, that have never seen a bear market? And then, they're programmed to buy dips. So
it was a great trade. It really was. But you got to have the conviction, and it comes. So now in an economy like this, you have to have conviction in whatever it is you're in, because you're going to get kicked around. And if you don't got that, you sell on the lows, and and then you start chasing the highs, and you just get churned to death. So, and I strongly believe that the economy out there is pretty strong. There's a ton of savings. There's a ton of pent up demand for things like autos. There's a ton of corporate capex happening. Money's still cheap.
And you believe the personal savings story, the balance sheets of consumers are flush.
It's flush, and the housing. Well, I mean, there's a huge housing dividend that will be borrowed against. Now, I don't think that's great in the long term, but it is what it is. And I think the psychology of the housing market, I saw some stuff. Home builders are really, really optimistic. Like, they're getting great orders right now. And I mean, that's a gigantic tailwind for the economy. I look down the list of sort of assets. Lumber companies look really good to me. Steel, that looks really good to me. Those are all sort of
things
macro
that fall on your foot and hurt.
Yeah, and copper coming out of this is going to be sensational. And seasonals, I know you like to mention them. It's the strongest month for copper in February. I don't know if that chart looks sensational right now, but I think it could grind. Again, I caveat that with I'm really laser focused on China and Omicron. I think that's the only real risk. I mean, aside from copper, aside from Russia, Ukraine, which I don't think I can do anything about, and I don't think those sanctions are going to happen. But it's moved up to a bit higher level there, copper, and I think it's going to run again. And I saw Freeport-McMoRan this week had some sort of positive comments on demand. There's supposed to be some more supply this year coming on, and I think it is, but the inventories are tight.
Yeah, I mean, look, it's worked off being overbought more in time than price.
Straight sideways on that, right? Yeah, what else can you hope for after a run like that?
Yeah, so I mean, you could have a huge move once we break out over 480.
And the softs, like you mentioned, are so bullish.
Yeah. Cotton, look at this. Don't tell me we're going to have to go back to wearing polyester.
I don't know where cotton demand comes from. What is that? That's a market I don't know. That's a nice move.
Yeah, there's cotton. So it's everywhere. I would not like to be in issues. Pulse. So I don't know what monetary policy is going to do about this either.
And on the stock side, you worry about margins at some point, right? If people are getting chewed up by these margins. And then they start, and that's probably it, right? Margins get squeezed, they raise prices, consumers want higher wages. There's your wage price spiral. And I don't know if the Fed, I think I would sell stocks if they have like a 50 basis point hike, at any point. That's when you say, okay, the Fed knows it's behind the curve and is going to aggressively catch up. That's,
sometimes I think about what can the Fed do to save the asset market and continue to tighten. And that would be if they could turn the dollar and make the dollar the sacrificial lamb here. That would help. That would attract more foreign demand for their, they could keep tightening and attract foreign demand for treasuries. Well, the dollar was weaker, right?
Yeah, but what if the opposite happens? And I think if the opposite happens, pushes down on imported inflation at least. But I don't think a rising dollar is going to keep up with oil going up 1% every day.
What's going to happen to commodities? You have to admit, commodities really performed well with a stable to strong dollar for over a year now. And if this rally is about to end, and this was just a corrective move, and maybe here at 61.8, 97.70. And we start trading back under 94, we could have maybe something like this, Adam, from here, and then from here down there, 82, 85, some type of dollar sell-off. That'd be bullish for stocks, I think. Weaker dollar, we could export easier, helps us pay off the debt easier. I think I think we're looking at the sacrificial lamb being led up to wherever they sacrifice.
Yeah, and I mean, that looks pretty bullish to me right now. We'll see where the close is, and we'll see if we get over that 61.8.
They always look the best at the top, Adam.
over a longer horizon, though. I mean, what's going on in the world is COVID, right? And COVID in America's moved on, right? Even though it's pretty bad right now. America's sort of powered through a ton of fiscal stimulus, a bit more coming. But the rest of the world here, I can tell you, is locked down tight. And, there's a mismatch in the timing of all this, right? So the rest of the world is going to open up. I think everybody's sick of lockdowns everywhere. And so there might, America had an incredible year of growth just finished up, and we'll be all right in Q1, where a lot of the rest of the world might be like flat in Q1. And then I think from there, though, you start to see America sort of level off a bit, and the rest of the world maybe surge. And that catch-up trade is negative for the dollar. And maybe the ECB, like if these inflation dynamics in the US are what they are, I don't see how the ECB can say we're not hiking till 2024. And, as bad as the euro looks right now, and I think it probably continues to fall from here for the next month or two, but sort of second half of the year is shaping up to be like a second half of the year market.
Yeah.
Because you have COVID over.
Yeah.
You find out what's going on with Omicron in China. And, maybe something else comes up in the interim, but I think then people get over their anxiety about the market. Maybe inflation starts to ebb. I mean, at some point they got to sort of supply chain. So
I've been talking about Brazil for a while. And, during our risk off move that we had here, look at how Brazil held up. It actually advanced.
I mean, Latin America, right? You got crushed by COVID, but they're flush with commodities down there.
Yeah.
And you got valuations that are insanely cheap, pretty good workforce, nice demographics. And it's totally washed out. Like there's zero interest in LATAM. So I go right from Mexico to the tip of Tierra del Fuego. And there's just a lot that looks good.
Yeah.
I like
their turn.
I like to look at Colombia. I like a lot about that, but Brazil is obviously a lot more liquid.
And a weaker dollar would help them.
It's that. And, the problem is rising rates, right? They're worried about rising rates, but
rising rates with a rising dollar is the worst, is toxic for them.
Yeah.
So that's another reason to turn the dollar.
Yeah. Yeah. And how much, I mean, if you start to see these places run, right, that's outflows from dollars. Right. A lot of this money that should be invested in a place like Brazil or anywhere in Latin America is sitting in dollars right now.
Right.
And once those economies turn, money goes into the Mexican peso or Brazil or Argentina or Colombia and says, all right, listen, there's mines here. Whatever. There's all kinds of resources here. And the economies are going to be growing 5-6%, maybe for a number of years.
And their currencies could revalue quite a bit.
Oh, big time.
Yeah, so I think that's a way to play in 2022. I think looking for opportunities outside the dollar.
Yeah, I mean that's where you want to be at this cycle, global cycle. But let's see how China does, and that I think is the. But if China does get beaten up here, right, and there's a really nice trade setting up, China has problems with Omicron, locks up, eventually opens up, lives with it like the rest of us. Then they start easing, right? They're going to ease all the way through this and start stimulating. So then you get China really cooking again. And, everybody else is doing pretty good. Demand for raw materials is going to be tight. And then you've got somewhere down like emerging markets, Latin America, man, it's beyond steroids down there. So,
a China slowdown first bodes well for crude coming in. So you could have good reentries. I'm with you. Let me know that when you're, going back in. And, commodities soften up for a little bit, but I think you really have to pay attention to the linchpin, and that's the dollar.
And sorry, I know you like the seasonals. I'll give you the quick hits.
Yeah,
decent one for Aussie, positive Aussie yen seasonals. Worst month for sterling over the last 20 years, although a little bit less so lately. Gold sort of long-term has been positive in February, but the last 4 years it's been lower. And that sort of trend, I think, has been front run a lot of the seasonals in gold.
Yeah.
Worst month for the NASDAQ, just narrowly, but February is the worst month for the NASDAQ. A lot of that was sort of front loaded to like the aughts from 2000 to 2010. The last few years haven't been as bad, but
Yeah.
that's the trend over 20 years. Second best month for crude, and the second best month for Chinese stocks. So maybe we do start to see that easing there. I don't know. I'm really worried about China.
Well, Adam,
Oh, there you
really,
go. Short's working for you
yeah,
right now.
you know,
I mean,
look,
I want to see it.
a broken clock, right? So
I don't know if you know. I know you know every axiom out there because I love coming on here because you tell me ones I haven't even heard. But they say that there's nobody more bearish than a sold out bull. And that's sort of me on crude right now. You know, very bullish, but I'm not long. So you get very bearish because you want to buy.
yeah, well, you get, you know, what they say, great minds.
Yeah.
So, you know, and it's very interesting that you're not bullish here. So, what a great interview, Adam. Once again, I really appreciate and enjoy
Thanks,
hanging out with you once a month here and talking about everything. And so, you know, have a great weekend and month ahead. You know, my seasonal is follow Adam Button to have a good month in February.
Well, God bless.
Okay,
That's very appreciated.
that's a good seasonal trade for me because I've been following you for a long time and appreciate what I've learned from you, bro.
Well, right back at you.
Okay, so that's a wrap, everyone. Hope you enjoyed Adam. You know, you could find him on ForexLive, his commentary, and good luck the rest of the day. And I'll talk to you soon, Adam. Thanks again.
Thanks a lot, Dan.
All right. Adios, everyone.